Good morning, everyone, including those that are joining us online. Appreciate all of you taking your time to join us, and hopefully we can share something that is valuable, right? And let's start, okay? Over the last 12 months, there have been quite a bit of change in Vietnam, something that you don't see often in other countries. Okay, so what we'll discuss today is some of these changes, especially, and our focus will be on tax. What are the tax changes that has happened in the last 12 months, plus what do we expect in the upcoming 12 months, or probably in the near future. Okay, so it will help to give you a bit of understanding, direction of where Vietnam is going, principally from tax perspective. Today, I will share the first part of the session. Later, we will have a short break. And then after that, my colleague Mai will talk about VAT, right? And Ms. Chan will speak about other taxes. And we will have a brief discussion about GMT as well, global minimum tax. Okay. Since January this year, right? We have seen the government announce the merger of departments. Okay, merger of departments. That means from X number of departments, they have reduced the departments within the country. Right. After that, from tax perspective, they have reduced tax departments from 63 tax departments in the country to 20 sub-departments. And following that, they merged 63 provinces into 34 provinces. So these are quite significant change. It impacts the infrastructure of the government, right? And in line with that, they also introduced new tax policies and roll out new tax regulation. And some of these tax regulation, the policies you can see, it is moving the tax department from the traditional way into more towards a modern method of working by adopting technology as well as AI. Secondly, also, they have introduced new laws that supports the more businesses, supports innovation, okay? And also they have implemented new methods to encourage better compliance so that there will be less enforcement, right? And less evasion of taxes. So let's look at these changes in a little bit more detail. National Assembly committees are like in other countries, right? Committees in your parliament. So they've reduced from 9 committees to 7 committees. Okay. Secondly, ministries. Previously, there's 18 ministries. Now it's changed to 14. Okay. And provinces. Previously, we have 63 provinces, and now it is 34. This, for me, from my perspective, is quite a significant change. Why do I say that? Imagine USA, right? USA of 51 states. What if the government suddenly says, from 51 states, we become 20 states? That's very significant, right? Imagine a country like Malaysia. You have 13 states, and then you suddenly become 5 states. So that kind of changes I, in my lifetime, rarely see, right? So with the change, in such change in merging states and merging provinces, right? Then structurally, the department will change, and there'll be a lot of significant changes. And as for tax department, we have we have 63. We had 63, now it's 20. Okay, so hopefully all of these changes will bring about efficiencies, and also we would see more positive change from Vietnam perspective. Of course, if you look at this aspect, right, we have 63 provinces and we have 63 tax departments, right? So before they merged the province, they changed 63 in the ministry restructuring, right? They reduced 63 departments to 20 sub-departments, okay? But now there's 34 states. So will they increase this to 34? So I would say from our tax circle, right? Likelihood, this could be the phase one of the restructuring, okay? And then later we may have from 20, we go back to 34. Okay, I've lived in Vietnam for a while, right? I would say when someone makes a decision, it's not always when you decide it gets it right, okay? From Vietnam, what I've seen is Vietnam is not afraid to make change. If they think they did not get it right, they will adjust and go to the right direction. So people in Vietnam always complain, government always change. Always cannot make up their mind, right? But I would say nobody is perfect, okay? They make a change. As long as each direction of the change is for the better, right? Then I would say it's always the better direction is always right. So for now, what we have is currently this new structure. It's very interesting. I think for me, I would like to see how they manage the change as we move forward. Okay. Now, visually, we talk about the merger of the provinces. Okay. Now, what I like to show is always something visual so that you can see how it looks like. This is Ho Chi Minh City in the past. We have a small part here, which is Ho Chi Minh City. Okay. That was before the merger. But now, after that, this part is Ho Chi Minh City. So what I like is, right, previously Ho Chi Minh City doesn't have a beach. Now Ho Chi Minh City has a beach. So you can go to the beach in Ho Chi Minh City now. And yeah, sorry, this would be easier to see. So now Ho Chi Minh City is shaped like this. Okay. Previously, it's just one small little slim city. Good. Now, these are statistics, non-tax related, but I always enjoy showing statistics. Visually, you can see how it looks like, right? Statistically, you should also know how does it change, okay? Of course, I'm in Ho Chi Minh City. I'll just talk about Ho Chi Minh City. And most of the people here are from Ho Chi Minh City. And those are online, most of them have been to Ho Chi Minh City. So Ho Chi Minh City has merged with another district next to it, which has a lot of industrial park, plus Barrier Vũng Tàu, which has the beach. Okay, so we happily took we happily took a lot more industrial park, so add more economy, and we took the resorts. So now Ho Chi Minh City, which is known is originally 2,000 square kilometer. Now it becomes 6,000 square kilometer, right? And then we had 9,000 people. We add another 4 million. Yes. From 9.5 plus 4 million, now we have 13 million people in Ho Chi Minh City. So the next time, right, any of you says, I want to go to one area in Ho Chi Minh City, it could take you 2 hours, 3 hours. Okay. So that's the statistic part. So now you can imagine how it looks like, how many people are there, right? And how big it is. So with this, to me, with this central bigger area, right? The Ho Chi Minh City has been the so-called local government has been to me, quite good in developing the area. Now they have a bigger area to develop, so it would definitely be a lot more interesting. Okay, so you will see Vietnam one day look like China, high-speed train everywhere, electric bike everywhere. That would be the direction. Okay, now to the boring part. We talk about tax. Okay, so how are we going to present this? We would be giving you a highlight of the regulations that has been issued in the last 12 months, including those that was passed last week, right? And then we will deep dive into changes that which I think would be of interest to all of you. Okay, and yeah. So we start off with corporate income tax first. Later we talk about value added tax. Okay. Then we would have a short discussion about global minimum tax. It may not impact all of you, right? But global minimum tax is a subject not many people understand. We will just share that, right? And then we will have something else on tax administration. Okay. Now, sorry, based on the research we have done, we haven't pulled out all the regulation. What we cover, what we have seen is in the last 12 months up to now, there's 4 new resolution, 5 laws, 12 decrees, and 3 circular that are relevant to tax. There's a lot more, but these are the ones that we fish out, right? Of all of these, the impact on corporate income tax, 6 of them impact corporate income tax, 4 VAT, 3 PIT, and 3 e-invoicing. Okay, so some laws in Vietnam is not just a law on tax or a law on social insurance. Some laws issued is a law that is issued to amend various laws. So sometimes we see a law and the law would say law to amend various law. So very interesting. So then they'll say reference to this law, this law, this law, right? Then they'll keep amending the law. Unlike in Commonwealth countries, in some Commonwealth countries, they will keep the law forever and then they'll change it bit by bit. And these are the lists of the regulations that we have looked at, right? And continuously. So firstly, we had Resolution 107. Resolution 107 issued in end of last year, effective 1st January 24, it introduced Pillar 2, Global Minimum Tax. Okay, we talked about that briefly. Then we have another resolution, right, which is Resolution 174. It reduces the VAT for a period from 8% to 2%. Okay, that is to help the Vietnamese consumers, right, to reduce their costs. After that, we have Resolution 198. 198 is interesting. It is effective recently and it's been introduced recently. This 198 introduced a lot of new tax changes, a lot of new tax changes, tax incentive, and focus on small and medium enterprise. The focus is to innovate, to encourage the Vietnamese as well as hopefully attract talents into Vietnam to develop the small and medium enterprise businesses. And Resolution 78 talks about social insurance, right? Now, this law 556 is the law that amend various law. Okay. Then we have the new VAT law, which was which will come into effect 1st July 2025. We will discuss that in more detail. And we have social insurance law, right, which also come into effect 1st July, right? That one we would cover under a separate seminar if it's significant. And Law 51, Law of Health Insurance Amendment. And finally, the latest one that came in, that was passed by the National Assembly I think less than 10 days ago, is the new CIT law, 1125. Okay? So, some of you might be wondering what is a resolution and what is a law? Or some of you know but never ask why, right? A resolution is a resolution. It's like a policy issued by the government, right? Is it law? Well, it's not called a law, but it is a policy, right? It's almost like a board resolution, right? Determined by the key people in the government, and it will be translated into law. Okay. Then law is, as in any country, is passed by the parliament. In Vietnam, it's passed by the National Assembly. And next, we have a decree. Decree is where it implements the law. So the decree issued that is of impact would be Decree 69, 180, and 05. 180 is to further reduce the VAT, continue to reduce the VAT to 2%. So as of now, I remember Vietnam's VAT rate was 10, has always been 10, right? But post-COVID, what do we have? The government reduced it to 8. And then reduced it to 8 for a 6-month period. And then they extend to another 6-month period. And now it extended to December 26, right? So literally, VAT rate is 8%. So one day when the government increased back to 10%, people will complain, oh, why so high? So sometimes when you give people something, they are very happy. When you take away, they complain, why take away? Okay, that's human nature. The other list is what we have are all other decrees, right? So of interest would be the slight amendment to the transfer pricing regulation, right? Then we have a decree 82. This is more, it basically defer the collection of taxes from companies, from businesses to assist with their cash flow, all right? Decree 70 is something that my team, everybody gets a bit hype out because it is more of it impacts the process of issuing invoices, right? So the process of issuing invoices, whether you issue now, how do you cancel the invoice and so on. This impact the daily operation, right, of businesses, because all businesses will issue invoice. So Decree 70 is something a lot of people are quite interested. And then what we have is circular. The rest are not so significant and doesn't really impact many businesses. Okay. Yeah, this one will be interesting. Decree 49. Threshold for temporary exit suspension. What is that? Sometimes foreigner comes to Vietnam, right? And then when they go to the airport, they say you cannot leave the country. Oh, why? Because your company owes the government tax. Okay, so now they issue a decree. Even Vietnamese, if you are the general director or legal rep and your company owes the government money, they will not let you leave the country. You still can go to beaches in Vietnam, enjoy, but you just cannot leave the country. Okay, so this This Decree 49 actually talks about how much as an individual you own the country, you own the government, then you cannot leave the country. For a bigger corporation, and then it set up the threshold. Okay, so recently the tax office launched a app, e-tax, e-tax what? E-tax something. So you can log in and check whether you own the government money or not. If you owe, you better settle before you fly out. Otherwise, you get stuck at the airport. Okay. Now, we talk about changes in the tax department. We have 63 departments, now reduced to 20. During the time they were reducing, right, we went to the tax office, right? And they told us, can you quickly settle this case, help us sign off these minutes and close the audit? Because after 28 February, I don't know where I will be. I don't know whether I still have a job, right? So the restructuring of the tax department reduces the people, okay? So basically the old tax model of the tax office as we understand it is functional based, very silo. One department do audit, they do audit, right? One department in charge of collection, one in charge of filing and so on, okay? So our understanding is the change is there will be more into hybrid. It's not just function based, but there will be specific officer that will look after a specific portfolio of client. So very much client focus. Is it good or is it bad? It's good because you get more attention from the tax office, right? If you go as a company, when you go to the tax office, you know who looks after your file, right? Right now, there's no one, no specific officer. Is it bad? Yes, it's bad because, not to say bad, but if somebody looks after your file, they know you more and more, right? Then it's harder for you to do something funny. Of course, if you don't do something funny, then it's good. You have better service. That's my opinion. Secondly is digital, right? Tax has, from the first day I came to Vietnam, 17 years old until now, right? Everything is gone digital. So I think we are moving into the next phase of digitalization from the tax perspective. Okay. And if you look at last time, it's very manual. Okay. It's very much paper. And then we look at not much use of technology. Now everything we focus on technology and AI. Okay, they will use AI to do audit on your company to analyze your data. Okay. Yep. So this is interesting. We are working with a more efficient tax department, right? And we cannot run away so much now. Okay, key changes, deep dive in. As the regulation I listed out just now, right? So I have mind map it and I have put like on two laws that I like. Okay, I cannot subscribe to this, but the like law is the law of corporate income tax and the resolution 198. Okay, so the other corporate income tax, what do we have is some changes in tax rate, right? Resolution 198 is to boost investment in startup, SME, and small businesses. Okay, so there are tax exemption introduced in this law. The others would be Resolution 107 on GMT, right? Decree 20 talks about updating of Vietnam transfer pricing rules. And yes, so we will focus on this, what I like. Okay, we only talk about what I like. Next, Okay, corporate income tax. Okay, this will be a bit boring, but I think for me, it's good to understand. Taxpayer under the law, right? In any tax law, they always say who are the taxpayer. Okay, in all laws, they say who is the subject that is subject to law. So in the recent change in the new corporate income tax law, they have changed this part, right? The taxpayer under the law include companies that do not have permanent establishment in Vietnam, including e-commerce platform businesses based on digital platform. So it says that even if you're overseas, you do not have presence in Vietnam, but you are still a taxpayer in Vietnam. Okay, so now the law has said these people are taxpayers that are subject to tax in Vietnam, even though they're not here, right? And then, of course, why to do that? Because a lot of people pay for their services in Vietnam. So they have to make it a taxpayer in Vietnam, then they have a basis to say you must pay tax. Then permanent establishment, right? So permanent establishment, what does it mean? It means the very basic concept is permanent establishment is a place of business for people, for companies that are not in Vietnam. Okay, if a foreign company comes to Vietnam, set up an office, hire a staff, doesn't have a company in Vietnam, that means they have a place of business in Vietnam. So in other words, permanent establishment means a taxable place of business in Vietnam. Okay, so now that law follows OECD. Now it has been expanded to include e-commerce platform, digital platform through which foreign companies provide goods and services in Vietnam. So any e-platform that provide goods and services in Vietnam, right? They are considered a place of business that the foreign company does business in Vietnam. So that allows, with this definition and this definition, that gives the legal basis for Vietnam government to say you have to pay tax in Vietnam. Okay? Any government cannot simply tax people. They must put it in the law. This is minor, right? This one of this change is when a company change the financial year, right? In the past, they just change it and then they'll inform the tax office after. So now the tax office say, no, you must notify us before you change. Okay? It's a very minor change in the regulation. Okay, now this is in the new CIT law, right? What the new CIT law has introduced is for companies, sorry, the standard tax rate in Vietnam is 20%. Always 20% in the last 120 years. Okay. But they introduced a tier rate whereby if your revenue is 3 billion or less, right, you pay 15% corporate income tax. If it's from 30 to 50 billion, you pay 17% corporate income tax. Right? So how do you determine that? If last year you earned 3 billion and before, this year you pay 15%. Right? Even though this year you earn 30 billion. Okay? That's how, principally, that's how it is. Okay? I just have to remind, currently it's a law. It is later they will issue a decree to implement the law. We will see more details. Now, if within this 3 billion or 50 billion, right, you have this type of income, correct, you cannot enjoy the 15 or 17 billion. So this is income from transfer of shares or capital, right? Income from sale of real estate or property, okay? And then income from transfer of projects, and so on. And also this part, income from production activities outside Vietnam. So if you have a small business, right? You have a branch overseas that makes profit, you bring back to Vietnam, right? Still subject to tax, but not at 17%. You'll be at 20%. And finally, this part here would be production of goods and services to subject to excise tax under law of enterprise. I interpret that as if I run what business? If I run karaoke, KTV, or a beer bar, right? That business I have to pay excise tax, right? So I cannot enjoy the reduced tax rate. So just take note the changes here, right? Then secondly is in addition to that, right? There are certain businesses, right, that the government will say you don't need to pay 20%, you don't need to pay 15, you don't need to pay 17. I will prescribe what rate you pay. Okay, that would be foreign enterprise with permanent establishment in Vietnam. So this part would refer to the withholding tax mechanism in Vietnam. Okay, you come here, you do business under a contract, you go out, right? Then you'll be subject to withholding tax. So this withholding tax is a fixed percentage, not based on your profit. So the government will issue a regulation to tell you how much you have to pay. Okay. Then the law has expanded to include e-commerce and digital platform, right? This is also will be on a fixed rate. Again, it will be on a withholding tax basis. Thirdly, would be enterprise with revenue not exceeding 3 billion, right? And unable to determine cost and expenses. So if you run a small business in Vietnam, right, you sell and you cannot keep track of your income or your expenses, then you pay fixed amount of tax based on your revenue. Okay, so then you don't have to keep books. Yeah, so small businesses are not required to do an audit, right? So as long as they pay a fixed amount of tax based on their revenue, the government is happy, right? And then last one is same, cooperative unions and public service units, right? Who can determine revenue but unable to determine the cost, then it's on a fixed percentage. So what are the rates? We will have to wait for a decree to be issued, right, to know what the rates will be. So I foresee they will issue a decree for this and possibly for this, right, and separate decree for each of these. Or it could be in a decree when they issue a decree to the corporate income tax law. Next, right, losses. If a company make loss in Vietnam, right, you can offset against income, right, from other income. In the past, if my company make a loss from a real estate transaction, right, that loss cannot be set off against a profit I make from another real estate transaction. I own a company, I got 2 property. I sell one, make profit. I sell another one, make loss. Cannot offset. Okay, so now they change the law to say, right, profit from real estate or where is it? The new law allows such offsetting. So now, if I have different profit from real estate transaction and losses, I can offset the two. Secondly, would be profit from real estate transfer, right? Profit or loss cannot be offset against profit or loss from activities that enjoy tax incentive. So in other words, if I own a company, I enjoy tax incentive. Beginning of my project, I make a loss. Then I sell a property, I make a profit. cannot offset. Okay. So yeah, this one 0% tax. This one you have to pay tax. You offset, then they collect no tax, right? So these are rules in relation to tax offsetting of tax losses. Deductibility principle. Okay, in Vietnam, for expenses to be deductible, right? It has to relate to the business. It has to have supporting documents, and it has anything more than 20 million must be paid by bank transfer. Okay, so the law has changed a bit to remove this part here. Okay, this is the deletion in the new corporate income tax law. So what does that mean? It means there's no more requirement to uh, pay anything more than 20 million by bank transfer. Of course, there are other regulations that will come in to manage this. Next would be input VAT not fully deductible. In the past, certain input VAT that you cannot claim refund is not tax deductible. Now it becomes deductible if it relates to your business. Okay. Interest, deduction of interest. Under the old law, interest expense you pay to any parties, you can only claim up to 150% of the commercial bank rates. If the bank rate is 10%, you can claim, and your related company charge you 15%, that's the maximum amount you can claim. But the new law says it is based on the civil code, right? You cannot exceed the amount prescribed in the civil code. So under the civil code, the maximum interest anyone can charge another person is 20%. Okay, so they are changing this slight change, right? From this to a 20% that is prescribed in the civil code. Next, there is another provision in the new CIT law that is very general. It says that expenses that do not meet conditions and content as stipulated in specialized law. It says any of the expenses that doesn't follow other laws, you cannot claim a deduction, right? So the more common one would be under the labor law, maximum overtime you can give your employee is 200 hours per year. If you give your employee 300 hours of overtime per year, that 100 hours already already does not comply with the labor law. So that 100 extra hours that you pay your employee becomes non-tax deductible. All right. So that's just an example. The law doesn't say very clearly. The law make it very vague to say if you don't meet conditions stipulated by specialized law, other law, then you don't get tax deduction. So these are things. So some of these would be if you do construction without construction permit, you have labor expenses for expat without labor, without work permit, right? This can be construed as not meet conditions of specialized laws. So tax office might come up with a lot more. They will dig and see what you don't follow, and then they say non-tax deductible. Okay, incentive, okay? So in the past, all of these industries are subject to tax incentive. High-tech software, supporting industry for certain manufacturing, renewable, okay, critical projects, high-tech again, okay, high-value manufacturing projects and so on. So in the new changes, they add in automobile manufacturing. So they are encouraging automobile industry in Vietnam. Hopefully, they hope China will move all their factory to Vietnam. Okay, then we will not see any more motorbikes in Vietnam. We just see cars, and people cannot move because traffic jam everywhere. Next, what do we have? Digital technology, R&D, okay, SME incubators, and so on. All of this business now is the industry, all this industry will enjoy tax incentives. Okay, what are the incentives? The incentive will be either 10% for 10 years or 17% for 10 years, right? Depending on which one you falls under, or it could be 10% or 15% during the entire lifetime of your project. Okay. Next, talk about location-based incentive. Okay. First, we talk about industry. Now, location-based. In the past, if you are in a difficult socio-economic condition, you enjoy incentive. That means you start your factory on top of the mountain, you don't pay tax. Okay. Social difficult condition, right? If you start a factory in the forest, you don't pay tax because it's difficult. Second, more difficult. And of course, then you got economy, high-tech part. In the past, industrial zones, right? Any industrial zone, you enjoy tax incentive. So this has been removed. Okay. So if you are in industrial zone, you don't automatically get incentive. But if your industrial zone is in the mountain, you can get incentive. Okay, I hope that helps you to understand. So what has added in is, if you are in high-tech agricultural zone or centralized IT zone, then you do get incentive. So just now we talked about industry-based, what business you are in, you have certain incentive. This one will be where you are located, you also get incentive. Okay. Then for expansion, if you're existing project and you need to build another factory, you also get to enjoy expansion incentive. Okay. So what is in the new law is that just add in a little bit more criteria for you to qualify for the incentive. Right. So they also make it clearer, right? If you're going in an expansion, right, then if your fixed asset must increase by 20%, your capacity must increase by 20%, right? And the additional investment you put into the expansion must meet the minimum level set by the government. Okay, so this is for incentives. Next, another incentive. SME and startup project, okay? You will be exempted from tax from first 2 years and reduce 50% for the following 4 years. So now this is under Resolution 198, right? The other resolution that I like, okay? So 198, right, talks about innovative startup, venture capital firms, and intermediate support. So you can see what the Vietnamese government is doing. They want to encourage more innovation. They want to make the country to be more innovative, to be more high-tech, right? And stand next to China and above America. And next, the other incentive is small and medium enterprise, okay? A newly established company from 17 May onwards, right? They will be exempt from tax from 3 years. So SME, what is the SME? SME will be small and medium enterprise, right? Previously, you see existing SME, they enjoy reduction of tax, right? From 20% to 15 and 17, okay? Now, this newly established, okay, will be totally exempted. 0% tax for the first 3 years. This is similar to what Singapore does. Singapore, for all newly established companies, as I remember the law, is first 3 years you don't pay tax. Okay, so what is the definition of SME? Okay, I just share this, right? SME would be if you are in different for agriculture and commerce is different. Agriculture, you must have less than 10 employee revenue, less than 3 billion, and capital less than 3 billion. Okay. Commerce services will be 10 employees, 10 billion, and 3 billion. So, I believe due to probably all this regulation is to rejuvenate and get the Vietnamese economy growing with a lot more people going into business, right? Innovation, more people go into business, right? It create more employment. No longer focusing on, I look for a job, I want to work in the factory. No, you all should be looking at, I want to start a new business, I want to innovate, I want to create something new. I think that's my interpretation of what the government is telling Vietnamese people. And of course, people overseas, yes, please come and help. And yes, and bring the country to the next level. Okay. So this word is important, innovative. That's what the government wants the Vietnamese people to be doing. Okay, this is another boring part. Transfer pricing, okay? So transfer pricing came into effect in 2017, okay? And yeah, the government has been increasing and getting more knowledge in enforcing transfer pricing, okay? So companies that has related party transaction must prepare document to show that you buy and sell from your related companies are done at market price. That's the basic principles. Okay, so within this law, right, in 2017 or 19, they came up with the law to say, no, this, okay, in existing law, the definition of related party includes anyone that borrow you money, right? The loan makes up of 20% of your equity or 50% of the total borrowings, medium and long-term debt. This is considered related party. So a bank that you have no relation lends you money, by definition, it becomes a related party. And because of that definition, right, then you as a company need to prove and prepare document to show the government that your transaction with the bank is at market price. Okay, so now they have come up and say this is not right. So they have amended the law and say as long as the bank that lends you money operate under the law of credit institution, right? It does not control and manage your business, okay? It does not participate in your operations, then it's not related. So this is just an administration to rectify an error in the law that they made in the past. That's my opinion. Now, a bit more, not on tax admin, right? This is my last slide here. So, this is Law 56. Law 56 says they have made a deletion in the law, right? Previously, they say overseas supplier, if you don't have a place of business in Vietnam, right? Then you are obligated to report to Vietnam and pay tax. Now they delete this. It's not significant, but I thought it's interesting. Withholding tax, right? From July 1st, companies that manage e-commerce marketplace digital platform, right, have to withhold tax, meaning to say if an individual goes to Shopee and sell goods on Shopee, right? So Shopee would have the obligation to deduct tax from you. That is my interpretation of this new regulation that comes in. It's effective from 1st July. Okay. So that means anyone that does business on platform, digital platform, right? If they if they don't declare themselves, then the platform should be deducting from you. So meaning to say, I think from 1st July onwards, things on Shopee may be a little bit higher price because of this tax. And lastly, this is just something interesting, is in the old law, what does it say? It says, if you overpay your tax to the government, you have a right to ask them to pay you an interest. Okay? So if my company pay more tax to the government, I have a right to say you must pay me an interest. Right? So in Law 56, they delete this whole thing. So now they didn't say you have a right. So if you overpay them, you cannot claim interest from them. Okay. Now, my analysis of all these recent changes is the focus that make the law more to get the digital economy, right, captured under the tax, right? Provide a clear mechanism on how things are to be taxed, right? If you are overseas doing digital business, right, they put in all these laws to make sure these are all captured and Vietnam gets a fair share of the taxes, right? And secondly would be encouraging more SMEs, encouraging more businesses, right? And hopefully the shops in Ho Chi Minh City, we don't see for rent anymore, right? Hopefully there'll be more businesses. So all this tax exemption, lower tax or SME, right, is focused on creating more businesses and also encouraging more foreign entrepreneurs to come to Vietnam. So that would be corporate income tax, right? We are on time, right? Okay. So we will take a break for 5 minutes. Okay. And then after that, Mai will talk about VAT. Hopefully more interesting than CIT. And meanwhile, if you can give a quick feedback, maybe now or at the end, right? Then I will appreciate it. And so that we can improve. And also, if you think you need to speak to us on some issues, right, we are more than happy to answer questions that may not be answered at the end of this Q&A. Thank you.
Thanks, Kevin, for the insightful overview of the key changes in the government restructuring and corporate income tax. Now, I will continue to share with all of you about some key change in the VAT law and the e-invoicing. And I hope that with this section, we will have more clarified and also know that how to prepare for the companies with the changes. Yeah, let's start with the enforcement effect of the new VAT law. And the new VAT law will officially take effect from 1st July 2025, which is just 5 days from now. Except for the regulation on the VAT exemption threshold for business, household, and individual who will take which will take effect later from 1st of January 2026 next year. And This will provide you a summary of the key changes have been introduced in the new VAT law. That is taxpayer, goods and service not subject to VAT, some changes in the VAT rate as well as the VAT taxable price and timing. Now the rule is more clear, and they also have some prohibits as the new added in the law, and also the condition for the input VAT and the VAT refund now have been updated also. So that is the 7 key change in the new VAT law, and now we go through the detailed level of exchanges. First is the taxpayer. As Kevin have said before in the CIT section, that we have now the taxpayer, the definition of the taxpayer now have been expanded to cover for the e-commerce and digital business in the digital platform base. It's cover the 3 new points. That first is the foreign supplier without having a permanent establishment in Vietnam, and they engage the e-commerce and the business, digital business platform with the organization and individual in Vietnam. What does it mean? It's for example, like some seller in overseas, they sell their product through the TikTok shop platform or Amazon platform to the individual or organization in Vietnam. But previously, they did not pay tax. So now they are included in the taxpayer and required to pay for VAT. Second is the foreign organization operating the digital platform. We know a lot of big organizations now doing the digital platform like TikTok, Facebook, Google, Netflix, or Booking.com, right? They are now under the new law have the responsibility to collect, to withhold, and then declare and pay tax on behalf of for those sellers who sell the product in their platform. So that is why the Vietnam government can collect tax. How they can collect for those the foreign supplier in overseas, right? They collect through the foreign organization managing the platform. Third is for business organization in Vietnam operating the e-commerce and digital platform base. For example, we have the Lazada Vietnam, Shopee Vietnam, and then they are now responsible to withhold, declare, and then pay tax for the business household and individual who sell the product in their platform also. So with this, we do the comparison between the old law and the new law, right? The old laws, the definition of the taxpayer was traditional. They mainly focus on the entity who have the PE, permanent establishment in Vietnam. And now the new laws is expanded to cover more for the organization in overseas without the physical presence in Vietnam. So no matter you do it online or offline, or you have the PE in Vietnam or you don't have the PE in Vietnam, as long as you do the business activity with the organization and individual in Vietnam, so now you need to pay tax. This change, I think, reflects the fast-paced growth of e-commerce business in Vietnam recently, and aim to ensure that the fair tax obligation between across all the business model, right? That is the first for the taxpayer. Now is expanded to cover for e-commerce and digital platform. And the second is in the new law, they added in some new object not subject to VAT. Which includes the first is for finance leasing import, that's import into the non-tariff zone. Second is some emergency and related relief import to support for the prevention and control of natural disaster, epidemics, and war. And third is for some culture and historical asset. Four is for some cross-border trade. So the fourth group item was added at the new object not subject to VAT. One of new object not subject to VAT is also currently the threshold for the business household and individual who have the total yearly revenues is up to 200 million are exempted from VAT. Currently, this threshold is just only 100 million, and now they increase to 200 million, and it will take effect from the 1st January of next year. This is the regulation to support for the small business household and individuals. Yeah, and the laws, under the new laws, there are also some items previously not subject to VAT, now being moved to 5%. Being moved to 5%, this group previously they are not subject to VAT, now 5%. And this group is the previously not subject to VAT, now being moved to 10%, back to the standard normal tax rate. And have also some item that previously 5%, now being moved to 10%. So what is the business impact for the changes, right? Business impact is for those company who have the business in the industry in this listing in this table, that need to review and see that now before that not subject to VAT, but now need to add in the VAT, and that is from the seller side. From the buyer side, if the buyer is the individual, so it means that before that you no need to pay VAT when you buy the product, right, or service related to this industry, but now you need to pay a little bit more for the tax because it has been added. And if the buyer is also the business, then they just pay tax and can claim later, so not impact. Though the most impacted is the individuals buyer, they will pay more for the tax. And also for this also, before that, if the industry is not subject to VAT, so you no need to issue invoice, you no need to declare for VAT, but now it moved to 5% or 10%, so it's required to register and use the e-invoice and also do the VAT declaration. The fourth is some update in the VAT taxable price and timing. So for those importer who imported the goods, previously the calculation for taxable price is include the value of the goods, the import tax, the exercise tax, and also for the environment tax if applicable. But under the new law, additional import, any additional import tax have been you need to add in when you do the calculation for the tax price. It means the VAT will be increased also. And for the time, this is not much significant different with the old law. However, now they are clearly mentioned in writing in the law that the time of VAT determination is for good. It is time when you transfer the ownership or the right to use of good to the buyer, or when you issue the VAT invoice. And for the service, it is the time when you complete the service or when you issue the VAT invoice, whichever comes first, that is the time for you to do the VAT determination. And also in the new VAT law, there are the new article, totally new, add into the law for the prohibit acts. And what is prohibits act? Like number one is the buying, giving, selling invoice, advertising, brokering the sale invoice. That's in actual, some companies, some business also do that currently, and now they list it in the Pro-Hedge Act. And creating the bogus transaction or fail, one of the main here is if your company fail into the fail it when we do the transfer the data of the e-invoice to taxpayer, tax department, then that's also treated as one of the prohibited act. And for the organized VAT fraud. So for those of this, we just need to take note and then make sure that our companies will not have that action. Yeah, and this is the update, the condition for input VAT. Under the new law, there are 3 conditions for input VAT deduction. First is the no change from the old law to the new law, but I want to list it here because it is important condition for you to claim input VAT deduction that must have the valid VAT invoice for all the purchased goods and service. And or if you are the importer, you must to have the proof of payment at the import state. Or if you pay on behalf of the foreign supplier, then you also have the proof of payment that's paid on behalf. So the second is previously we have the threshold that 20 million. If above 20 million, the company must do the payment via the bank transfer. And below million, you can do via the cash, right? But now it's removed already. It's removed already, meaning that all the purchase of goods and service now must be paid via the bank transfer. However, there are the threshold of 5 million already mentioned is consideration under the draft law of the VAT. So we hope that when the draft law become official, no change in this point, and then we also have the at least 5 million for the for the cash payment, not owned via the bank transfer, right? So for the exporters, when do the exported goods, they require more documentation. It means you need to keep the first condition and second condition is in proper plus for the exported goods. Need to have the more documentation like packing list, bill of lading, insurance doc if you have to show to the tax officer for the VAT 0%, and then you can get the deduction for the input VAT. And one of the updates for the condition for input VAT is the new law mentioned that this is no change from the old law, but that is the principle, the general rules. So the new the VAT must be declared and deducted in the same periods as its arrival. And the changes here is about the errors. If during the VAT declaration, there are some errors when you do declaration, and then if the correction leads to the result that increase the tax, then you need to back to the original period to do the revised tax declaration. But if in case the correction is lead to the result that no more tax payable or not or just affect to the VAT deductible carry forward, then you can do the revise, can do the supplementary, the declaration in the current periods that the errors is found. Previously, the regulation mentioned that if as long as it is errors, then you need to back to the original period to do the revised declaration. So that changes, I think, to reduce the administration burden for both tax officer and the taxpayer. And for the VAT regulation have been updated. The first update is now they allow for those business have the good provide the service and goods with the 5%. If you have the accumulated VAT deductible and up to 300 million within the 12 month and 4th quarter, then you have the right to do the VAT refund submission. Before that, no, they don't allow for the 5% activity, but now they allow for 5% activity. So VAT refund shall not be applied for the goods have been temporarily import to Vietnam and after that export to the other country. So that is not allowed to claim for VAT refund. And one in relation to the investment project. So in addition with the new investment project, now the VAT refund is a permit for expansion project, include the multi-phase investment project. And the VAT refund can be applied within 1 year. It means that you finish the investment project already, you have another 12 months, 1 year to do the submission for the VAT refund. And the deadline, they said that from the completion of completion of the project investment, right? So the completion of that is they determine based on the first date that the company generate the revenue, exclude for the trial run, financial income, and also asset liquidation. Yes, so that is for the 7 key changes in VAT law. And now we will talk about the changes in the Decree 70 about the e-invoicing. This is the main changes in the Decree 70 that we will go through in the detail. First is the expanding the use of e-invoice. Yes, as mentioned in the VAT, in the changes in VAT law, right? Now the foreign supplier is treated as the tax payable, at the taxpayer, and how they pay for the tax. They also can volunteer register to use the e-invoice, and then based on that to issue to the their customer, and then based on that to do the declare and pay for tax. It means before that we have some client have the business transaction with TikTok, but when they issue the invoice, they just issue the invoice for the net amount without any tax, and then they say that that is their invoice. So now they have the right, they can register for the e-invoice and issue the e-invoice to the client. And if once they register already, so all the data of the e-invoice will be automatic transfer to the tax department through the tax portal. And the second change in the e-invoicing is the mandatory use of e-invoice from cash register. Who must comply for this new regulation? That is for business household and individual who have the total yearly revenue more than 1 billion Vietnam dong, and then they are required to do the e-invoice generates automatic from the cash register through the e-invoice system. And also for the enterprise selling directly to the end consumer, for example, retail store, supermarkets, right? And then for the shopping center, for those who are directly sell to the end consumer, then they are required to use the e-invoice generated from cash register also. So the requirement here is the one use the e-invoice generate, then must to transfer all the data to the tax department. How to use it? They here in Vietnam, they have the list of the supplier can do the integration for the company between the cash register to the e-invoice system, and also automatic transfer to the tax department. Yes, and the third changes in the e-invoicing is the regulation on the timing of e-invoice issuance. For the sale of goods, no change from the old law to the new law. Still, but it is the time of transferring the ownership or the right to use the good to the buyer. But in the export good, there are changes that the VAT invoice will be issued. It will determined by the seller, but no later than the next working days after custom clearance. For example, today you finish the custom clearance for your export good, right? So next working day, which means tomorrow, Friday, you must to issue the e-invoice. That is the deadline. And for the provision of service, so it is upon the completion of service, or if you receive the payment during service provision, so the time to issue invoice is at the time you receive the payment. Exclude some deposits or advance of some certain service that mentioned in the law. The red is the one is the upon the service completion, and one is the if you receive the payment. And one of special case that I think impacts quite a lot of company, because this is the last scale for those company who have the big transaction, need to do the data reconcile between both parties, between the seller and the platform, that e-invoice is allowed to issue within the 7 of the next following month, or within 7 days after completion of the reconcile by both parties. And the periods of reconcile by both parties must mention clearly in the agreement that both parties will do the reconcile between this period. For example, from 1 to 25 of the month, they will do the cut off, and then they do the reconcile. Then they have to issue invoice within the next 7 days after that, after 25. In the past, in the old law, they also listed in the list of service can apply for the data reconcile, but now they also allow some new service that includes quite more, for example, e-commerce service and logistics service. For e-commerce, because they have a lot of seller, right? They have a lot of seller on their active doing business in that platform, so they need the time to do the reconcile. That's reason why they are allowed now to do the reconcile before issuing the VAT invoice. So the next mandatory under the Decree 70 is for the content of e-invoice. Content of e-invoice, first and second is no change from the old law to the new law. It still maintained that the name of the goods and service must be in Vietnamese, in local language, and must be detailed up to the style of the product. And if for the goods requiring the registration and ownership, then must include the frame number, engine number, or address or area. That is not changed from the old until now, but the change is for transport station. For example, for transport station service, now the decree of the invoice must be include the vehicle license plate and the route. It means from where to where, then you need to mention in the description of the invoice. And for the goods transport via the digital platform, the invoice must be include the item name, the sender name, the address, the tax code, and the ID number. It means more detail on these for the description of the invoice. Some special case, because of the transaction happens a lot during the periods, right? So the regulation now allow you to issue the invoice in general and attach together with the detail list. But the detail list must also just apply for some certain industries like electricity, water, telecommunication, and banking. Also for the promotion giveaway, they also allow you to issue the VAT invoice in January, in general, and then after that attach together with the detail list. So about the signature timing, it is the time when the buyer and the seller sign on the digital invoice, but the new regulation, the new mention in the VAT law now is if you issue the invoice today, you have the must to sign and transfer the that invoice to the tax authority no later than next working day. It means that you have one more day to do the sign invoice and then transfer the invoice to the tax authority. The declaration timing is for the seller is based on the issuance date of the invoice, but for the buyer, it's based on the date that you receive the valid invoice. This is the regulation for you to issue, sign and issue later. However, for the declaration of the seller, you also must to do the declare that invoice into the current period. Yes, and as we have mentioned that the detail invoice of the detail of the buyer need to be in the invoice, right? But for some case, the buyer information is not required. That is for retail invoice, for first purchase by individual or for the casino private gambling. That's for that kind of business activity, then you no need to require the buyer to give you all the detail for issuing VAT invoice. That is allowed from the law. And about the e-invoice adjustment, that's for some special case like sale return or trade discount. Previously for sale return, that the seller will issue the VAT invoice for those return goods. But under some private ruling, tax authorities is not allowed, and under the old law, the buyer also can issue the VAT invoice for the sale return. But recent few years, then the tax authority reject for those invoice issued by the buyer for sale the goods. So a lot of enterprise, a lot of company complain about that, and they write a letter and they say that it creates a lot of administration work for the company to do for the seller back to the original to do the declaration. So now the new law issue and they allow the buyer to issue the VAT invoice for the sale return as long as both parties have the written agreement to mention clearly that the buyer can issue the sale return invoice. And for trade discount invoice, its issuance option can apply on the last purchase or next purchase, or can separately issue in one invoice to adjust for all these discounts amount. And some of the regulation on the invoice adjustment and replacement. The first one is no cancellation invoice anymore. It means that now if you're doing the wrong VAT invoice, no cancellation apply. Just can do the adjustment or replacement for that invoice. Second is when you do the issuing VAT invoice with some wrong information, right? Wrong in name, wrong in address. It is regulation to allow you that no need to do the adjustment invoice for that kind of wrong. Kind of mistake. You just need to do the inform to the tax authority by using the form. And then after that, both buyer and seller can use that invoice as normal. And some case that require the adjustment invoice is if the invoice are the quantity is changed, the value is changed, the tax rate or the tax amount is changed, or for sale invoice for discount return. So for that case, it is required to issue the adjustment invoice. And now, previously, that if you want a wrong mistake invoice, you need to do the one adjustment invoice. But now the laws allow you to do the one adjustment invoice for the list monthly invoice within the same month with the same buyer. Then now you just can do one invoice. You just do one invoice enough. No need to do one by one as previously. And also the adjustment invoice may show in the positive amount in case the price is reduced, and negative amount in case the amount is reduced, and positive value in case the increase. Previously, they did not allow the negative amount, so they ask you to the law mentioned that you need to decrypt in the content of the invoice the decryption that it is increase value or decrease or increase value. But now they allow to solve the negative for the declaration timing, and both seller and the buyer, when you do the adjustment invoice or replacement invoice, you need to back to the original taxpayers of that VAT invoice, then doing the revise the declaration. So now we will talk about the global minimum tax, and Kevin and Tua will host the session to share with you.
We move to, we have last 15 minutes, right? We talk about a bit of tax that may not be relevant to many small companies, which is global minimum tax. Okay, I'm pretty sure many of you have heard about global minimum tax, right? It is what we tax profession call Pillar 2. Pillar 2 means under OECD, right, the expectation is for big companies to at least pay 15% of taxes, right? Companies like Google, Apple, and so on, they might restructure the company where else part of the business goes to an area where, like iron, that they pay 0% tax. So this Pillar 2 GMT rule comes in and say, as a group, the whole group must at least pay 15%. Okay, so which means to say if one country pays 0, another country pays 30, right? Then then all entities within that whole group must at least pay 15%. So that's the simple explanation, as simple as I can put in for global minimum tax. What are the rules, right? The rules is, M&E group, that means multinational enterprise whose global revenue exceeds 750 million euro, right? In 2 of the last 4 years, okay? Then they are subject to what we call global minimum tax, Pillar 2, okay? So how is that implemented? So if we have a company, a group that has got more than 750 million revenue in the last 4 years with 100 subsidiaries in different countries, then each of the countries have the right to implement rules to collect at least 15% tax. At least 15%. So countries where they are enjoying, say, 0% tax incentive, right? But because of this rule, the government must collect 15%. And if the government in that country doesn't collect, then the government in the holding company has a right to collect that tax. So these are the domestic top-up tax rule and the income inclusion rule. Okay, it's a bit challenging to understand. But for Vietnam, okay, Vietnam, in Southeast Asia, we have 5 countries that have introduced the GMT rules. right? Singapore, Malaysia, Thailand, Vietnam, and one more country, I can't remember. Okay, in all of these countries, Vietnam is the first country in Southeast Asia to make the regulation effective. That means it's effective on 1st January 2024. In Malaysia, in China, the effective date is 2025. What does that mean? That means for MNCs that operate in Vietnam, subsidiaries in Vietnam, then that meets this 750 million criteria, then those subsidiaries would have to comply with the Global Anti-Base Erosion Information Return. We call it the GLOBE rules. Okay, so basically any MNCs that meets this 750 million threshold in the last 2 of the 4 years, right? Then their subsidiary in Vietnam would be required to submit a tax return, a GLOBE return, right? Global Anti-Base Erosion Information Return. So Vietnam has issued a regulation on that, right? So means to say, example, Samsung in Vietnam, they would fall under, they would meet this criteria, right? Then Vietnam tax government would say, you have to submit your global return, right? In addition to your corporate tax return. And if all your companies in Vietnam pays tax less than 15%, then your tax must be increased to 15%. That means you must pay additional tax. So it applies to big MNCs. So what happens is the law comes into effective for the first financial year 2024. Within 12 months of December 24, right, you have to file a tax return. And you have to appoint, using Samsung as an example, Samsung has many companies here. So they have to appoint one company to submit the return. Okay, so they will have to calculate all the income of all the companies in Vietnam, calculate what is the effective tax rate, whether it's more or less than 15%, right? And then they have to pay the additional tax if there's any. Okay, so basically, if for MNCs that have subsidiary in Vietnam, we have clients, Italian holding company subsidiary in Vietnam, Singapore holding company subsidiary in Vietnam. The group exceeds 750. So actively, they are looking at, okay, how do we do, what do we need to submit to the government? Even though your effective tax rate is above 15%, you still submit a return to the government. That's under the OECD rules. Okay, so part of the OECD rules is when any countries, when they implement this global minimum tax, they can put in safe harbor rules. Safe harbor rules mean in the first 3 years, if you meet certain criteria, right, then you don't need to pay the additional tax. So these are the safe harbor rules that is laid out in the OECD, okay? And in the first 3 years, if you make a mistake in complying with the GMT Global Minimum Tax Regulation, then there'll be no fines or no penalties. So this is very complicated to understand. We move to the next. So very, very brief on GMT. Next, so these are recommendation. Okay, I'm sure if we have got clients who are subsidiaries of MNC, already the group tax in the whole group, right, is already looking at what they need to do, how do they implement compliance of tax requirement in the respective countries they are operating in. We also have clients that told us, right, they are preparing to comply with the global rule in Vietnam, but due to Trump tariff, right? Their revenue drop, they expect they may not meet their criteria. Okay, so now tax reform. I let my colleague here a chance to speak. Ms. Tua.
Good morning, everyone, and thank you for you still focus on until now. And please give me some minutes. I will give you some update information about tax audit reform and electronic identification for our organization. The first, I will say with you some about the tax audit reform. Recently, the tax authorities issued the resolution 9 and 8. It is mentioned some rules and process for the tax audit. The first is the number of tax audits must not exceed 1 per year. It means you don't have not worries about this. Tax audit will come your company more and more over 1 per year. And the next is the tax authority will priority to checking the online data. They will reduce the checking in the person. It means they will not visit your company office and knock the door and come to in the check the data. And they also apply AI to access the data online to checking. And the final, if the the company follow the rule properly, so the tax authority will not checking in person. It means they will not check field audit, they just desk audit. This is some information about tax audit reform. I think it is helpful for you so some in the future. And the next is the electronic identification for our organization. As you know, from this year, every Vietnamese people must use EID to yield government services. Like you use EID as a tax code to submit BT violation, and how it happened to the companies. The company also must to apply the ENDs, and if the business don't have the EID, you may difficult to yield the government services, like submit the tax return or the public service. And how it is done, and the next I will share with you some the procedures. The first, you must to active account on the VNEID app. It means the legal guests or the authorized of the legal guests must have valid EIDs. And the second, we submit the application, submit online via VNED app or in the person, and the result will send be via VNED app or phone number or emails. So the problem is for the foreigner is the legal gaps. As you may know, the Vietnamese have the EID and automatically the ID card is your EIDs, but the foreigner don't have EID cards. So recently the ministries of police, they also issued the letter, and it say that until the 1st July this year, they will have the instruction detail about how the foreigners complete the ENDs. And for the foreigner legal gap, so please wait for instruction in the future.
Yeah. Finish, right?
Yeah.
Can I share that? For the EID, right? Just a quick recap. Okay. As the Vietnamese government goes digital, right? That means all services would be online. Okay. So everyone to access the government service would need to have electronic ID. It's similar in Singapore. Singapore, you have SingPass and you have Corp Pass, right? SingPass is for individual, Corp Pass is for corporate. Okay. So in Vietnam, we are implementing this. So for individual, it's not an issue. It will be based on the identification card of each individual. Corporate would have the legal rep of the company register the corporate EID. Okay, so the challenge here would be what happens to companies whose legal rep are foreigners. Foreigners do not have a Vietnamese ID, so they don't have an EID, right? So how do they register the EID for the company for which they are the legal rep? So there have been a delay in this because foreigner does not have an electronic ID card, right? So the government is working to resolve this issue. Okay, so it's a technical issue, and I just received a phone call this morning from people I know in the police department. They say from next week, 1st July, they would be able to have foreigner register an EID for the legal rep. Then once the legal rep has the EID, then the legal rep can log in to register the EID for the company which they are the legal representative. Okay, but the issue here would be the police, the immigration can only issue EID to foreigner who has a temporary resident card in Vietnam. That means those that are basically have a work permit in Vietnam. So if your company is a foreign investor company in Vietnam, your legal rep is somebody that lives in Hong Kong, right? And that person does not have a work permit or a temporary resident card in Vietnam, then you cannot get the EID for now. Which means your company would not be able to use government services, which means that company cannot submit tax return, which means the company pay a bit of fines, right? So yeah, so I think the last bit is probably something the government may or may not resolve. But for now, foreign investor enterprise that has got legal rep who has a temporary resident card and a work permit, right? From next week, they should be able to register an EID for themselves and register the corporate EID for the company. Interesting times. Okay, we are finished. Thank you. And we go to a Q&A session. Any Q&A from the floor here first? If not, then we will take the Q&A from the online. Yeah, I see that. Okay, online question. May or may not have answers. Okay, I try the best. First question. My company sells goods on e-commerce platform and issue VAT invoice to buyers at the exact time the goods are successfully delivered to the buyer. After 10 days, the customer decides, say, I don't like, I return to you and ask for a refund. So, do I have to issue an adjustment invoice exactly on the completion date of receiving the good back and refund to the customer? Or can I issue the invoice 1 or 2 days after? Okay. So the question is not about must I issue the adjustment invoice, it's about okay. Yes, you have to issue an adjustment invoice. As to when you must issue, right? I think the law is not clear, but let's not wait for 1 year. 1 or 2 days should be okay, in my opinion. I hope that answers Miss Dao T Thui's question. If not, feel free to drop us an email. We can discuss more, right? We have 6 questions only, so not very long. Second would be foreign enterprise without a permanent establishment in Vietnam, including enterprise doing e-commerce building, based e-commerce business based on digital technology platform pay tax in Vietnam. How will foreign enterprise without a PE pay tax? If you don't have a PE in Vietnam, okay, but you are selling and providing services to Vietnam, there is a mechanism, right, for foreign companies to directly register with the tax authority. Right, you do a registration with the tax authority, you get a tax code, right? Once you take a tax code, then you submit declaration to the tax office on how much money you receive, calculate the tax you have to pay, maybe 5%, 10%, right? And pay directly to the government. So, in other words, there is a mechanism for foreign companies to register tax as under this process. And for tax declaration, the foreign company can log into the government portal to register and to submit the tax return. Okay, I hope that answers the question of Miss Cham Pam. Next, we have Chung Kan. Is the machinery service repair service provided to EPE still entitled to 0% tax rate? Okay, this is an interesting question because in the past, everything sent to the EPE or to the export processing zone is 0% VAT, right? But my interpretation of the recent changes in the law that says it will be 0% if the services or goods relates directly to the production activities. So that is very vague, right? So the question here would be, does your machinery repair services relates to the production activities, right? If it relates to the machine repair of the machine, yes, then it should be 0, right? If it's others, maybe not, you have to charge VAT. Okay, Zhong Kan. Next, we have Nguyen Wan Nin. Any question here? Miss Yuan, any question? Okay. Nguyen Wan Nin asks, regarding the regulation on HDDT, wow, 花灯点赌, right? E-invoice. Transportation service must have vehicle, license plate, and route. Does it apply to enterprise that own vehicle and to enterprise that provide intermediate services such as freight forwarder not owning the vehicles? That's a good question. Freight forwarder, you don't own the vehicle. Based on Decree 70, okay, what it says is provider of intermediate services such as freight forwarders still required to issue invoices and still required to include complete details of the vehicle plate number and the route for the transportation. So that is in the decree. So yes, you still need to show what you are transporting. This is only the law, right? Law of VAT, right? Yeah. So now what we are discussing at is law level. Okay, so let's look at what will. This decree 70. Okay, sorry. So it's decree. From this person, very strange. The name is no name. Sorry. For exporting processing enterprise, Are there any cases where purchased goods still subject to VAT? Example, accommodation, taxi services in Vietnam, right? Supplier issue invoice to EPE, VAT still calculated. Can this be VAT refunded? So you talk about accommodation and taxi services, right? These are services, in my opinion, these are services provided outside Vietnam, right? Your accommodation is consumed outside Vietnam, not outside the EPE zone, right? Not in the EPE, not in the company. So rightfully, if we look at the concept of where the services is rendered and where the services is consumed, right, then it would be subject to VAT. Okay? If the taxi that you took goes around the factory only, then it's consumed inside the EPE, then no need to apply VAT. However, based on what I mentioned just now, right, the law has changed a bit to say any services rendered to EPE or EPZ, for it to be qualified for 0% VAT, it must relate directly to the production activity. So there is the part where it's not clear, and how do you prove that? Of course, very clearly, if I buy material used to make product, then it's 0%, right? If I buy oil for my machine, yes, it directly relates to the production activity. If I buy things for the office, does it relate to the production or not? So that is a bit in the gray area, right? Then the last question I have here is, how is payment on behalf applied to comply with the non-cash law, right? What evidence is required? So the question here is asking, under the VAT law, right, everything must be non-cash, right? Everything must be through bank transfer and not via cash. So if somebody pay on my behalf, how do I prove it is non-cash? So if another entity pay on your behalf, right, then I guess you have to transfer back to them. That would be the evidence of non-cash. Divert a bit. If your staff goes for business travel, right, they pay cash for taxi, right? They use credit card for hotels and airfare, and they make a claim. Then you transfer back to them by bank. Then that should be good enough. It's non-cash. Okay. Yep. This is all we have, and we have run into 11:35, 5 minute overtime, right? And somebody point at the computer to say something. I don't know what she's saying. You still have 2 more questions from the online. And where's the question? Oh, close the file and reopen. Okay, thank you for that instruction. What decree is that? Mr. Chong Nyat Hua, right? For the issuance of adjustment invoice, there must be a record for both parties to sign. Yes, there has to be a minute, right? In case the invoice has an incorrect name, tax code, and recipient cannot be identified, how can the adjustment record be made? In case the recipient of the invoice cannot be identified. So if the recipient cannot be, okay, who would require for the adjustment, right? If the recipient wants an adjustment, right, then the recipient will come back to you and ask for it. Otherwise, if they don't come and ask for it, right, then you cannot do anything. You will have to stick with the invoice that has been issued. Cannot change. You want to change something, both parties must be there. So if it's to the if it's not to the benefit of the buyer, then you have to wait for the buyer to come back. If it's not to the benefit of you, then unfortunately you have to wait or find the buyer. Kyle, for micro and small enterprise having lower tax rate, the revenue threshold is based on global revenue or Vietnamese. Micro and small enterprise, right? That enjoys under the CIT regulation, that enjoys 15% or 17% tax rate. Is that the one? This is based on Vietnam, okay? Not based on global revenue, right? As long as your Vietnam company, Vietnam business revenue falls below that threshold, right? In the previous year, then in the current year, you should be able to enjoy the reduced tax rate. And do I need to update the file again? No. Okay, we are 8 minutes overdue, and thank you everyone for your time and for spending your precious 2 hours with us, right? We appreciate it. If you find it not valuable, please drop me an email. I will find a way to compensate you back by giving you free advice and take up another 2 hours of your time. Thank you. Okay.